I'm joined now by Edward Fields, CEO of DionyMed Holdings, Inc., trading on the CSE under the symbol DYME. Edward, welcome to the show.
Thanks so much, James. It's great to be here with you.
You bet. Edward, can we start with an overview of what is the business of DionyMed?
Yeah, look, this is a cannabis brands company. 50% flows through traditional retail distribution, and 50% of our revenue is via direct-to-consumer. We are the largest direct-to-consumer fulfillment platform in the industry, delivering over 45,000 cannabis direct-to-consumer experiences every month.
Oh, wow. Okay, so do you guys actually, are you a vertically integrated supplier of the product, or do you provide just the fulfillment and consumer experience portion of the transaction?
Yeah, so we have some vertical in Oregon where we cultivate, and we also have, but primarily in California, we're a spot market buyer of product. We deliver finished goods.
Okay, so direct to consumer. Where do your customers get where do they buy their product? Online?
Yes, that's correct. It's an online experience through a great partnership with our friends at Ease.
Okay, and Ease is one of the biggest cannabis courier companies in California, if I'm not mistaken.
Well, Ease is a fantastic online experience for finding and buying cannabis. We actually provide all of the fulfillment for Ease in the Bay Area.
Oh, that's interesting. So then you have some...
I think, James, it's worth commenting that the new regulations in California for direct-to-consumer make it possible to now expand our offering to serve customers throughout the great state of California. We've got some exciting news coming about a strategic partnership that makes it possible for us to expand our footprint beyond the Bay Area, and we're doing so under our own direct-to-consumer brand, Chill.
Mm-hmm. Okay, so is the value proposition from the investment side that there's going to be better margin and better ultimate profitability in a direct-to-consumer model such as DionyMed's relative to the vertically integrated multi-state operator who's trying to run dispensaries as well as grow operations, extraction, bakeries, etc.?
Yeah. Look, we're a brands-focused company. Eventually, the plant gets commoditized, and we think all of the value creation accrues to the brand holders. We really like the strategy that we're executing against. We're delivering product through 700 retail doors today. We're delivering product direct to consumers a la an Amazon Prime-like experience. And, there's tremendous growth of opportunity available across the space, both here in California. We're in Oregon. We announced Nevada earlier this month. We're super excited about developments in Colorado, and we've also announced Massachusetts. This is the national footprint that we think leads to the kind of premium for investors looking for a long hold experience around actual cannabis brands.
Mm-hmm.
Great brands like Winberry Farms, for instance.
Sure. Can I inquire on behalf of interested investors everywhere, what is the pedigree of your team in terms of developing national direct-to-consumer strategies like that based on brands?
Yeah, look, we have a world-class Silicon Valley team. We recently announced a new chief marketing officer, Michelle Sitton, both an experienced and seasoned CPG executive from Nestle, worked on the Power Bar business while she was an executive at Nestle, and then moving over to Curaleaf, where she helped the great team at Curaleaf build out a portfolio of exciting cannabis brands. As our chief marketing officer, partnered with a super sophisticated, data-driven Silicon Valley logistics team, we think we're uniquely positioned to play a defining role in the cannabis ecosystem.
Well, you bet. And in terms of competitors on that model, is there much on the landscape currently?
Yeah, look, I think, excuse me, I think there are some great companies doing great work around direct-to-consumer. We're super excited to be partnered with Ease. We have friends at a company called Onalife, which is getting started. There's a great company called Sava, which is doing very interesting subscription, highly curated sort of very top shelf cannabis brands. This is an exciting time to be in the cannabis space, and I'd actually suggest that while there's certainly a competitive dynamic, and it's getting more competitive, sort of with every passing day, I think there's also this notion that there's a large ecosystem that's trying to find its way as this industry surges and scales into what will be a tens of billions of dollars industry in the next couple of years.
Mm-hmm. One of the challenges that we're observing is, for example, in the state of Oregon, there recently published an article in the Oregonian that suggests that Oregon is overproducing cannabis at a rate of about 100% of demand. And so I'm curious, how does that situation resolve it, A, and B, how does an entity like DionyMed use that dichotomy to its advantage?
Look, we think time is the most powerful weapon on our side. We are very, very long the space. Our largest shareholder, the Fields family, which I'm a part of, has a decades-long vision for how this industry unfolds. These aberrations across markets, which are really driven by the, sort of the artificial barriers from the regulators by state and the federal government prohibition, are eventually going to go away. And James, one of the things I was excited to see today was news from Capitol Hill and in Washington, D.C., suggesting that the House is going to take up another vote with the Democrats now in charge to normalize banking. And if I may, for just a moment, I'd like to simply ask you and all of your investors to be powerful advocates for change at the federal level in Washington for no other reason that it makes no sense at all for the employees at DionyMed and everywhere else in the cannabis industry to be forced to use cash currency for cannabis transactions. It raises safety issues, it raises security issues, and it's simply an unacceptable business condition that the powers that be in Washington can fix. And oh, by the way, the day that the legislation signs for banking to normalize in cannabis, U.S. cannabis stocks triple overnight.
So is that the major barrier holding back the valuations in cannabis stocks that are operating in the U.S., in your opinion, is the inability to efficiently bank and move capital?
Look, at the end of the day, right, a business like ours, which had, trailing, $20 million in top line revenue, we're guiding towards a 25 plus $30 million quarter in Q1. I mean, James, doing that business in currency and asking employees to carry it around is a safety and security issue. It just doesn't make sense. It isn't right. And the day that federal prohibition around the banking goes away, capital markets become available in the U.S., normalized banking and credit lines, and the cost of capital plunges. And this is a business that can grow up and, by the way, support hundreds of thousands of jobs, great jobs, at a time when you've got a product that's been in the shadows for decades, is now available to come out and be part of the normal mainstream, sort of American consumer palette of choices for both medical, which I'm particularly passionate about, as well as recreational.
Mm-hmm. Okay, so then as an investor or interested investor in DionyMed, what are the catalysts I'm going to be looking for in 2019 that will sort of bring me to the realization that this is a winning business and a winning business model?
Look, I think 2019 is all about execution for the industry, full stop. And when I say execution, I mean top line and bottom line delivery. It really does come down to who's got the team that's ready to scale, who has the balance sheet that can sort of lock in a stable supply chain. We'll continue to see turbulence from some of the regulators. We'll continue to see noise about things like lead and vape cartridges. And thank goodness we're starting to see consistent, very high-grade testing standards. It's our view at DionyMed that the thing that consumers care most about is the safety of the product. So look, I think that what investors should be on the lookout for is how well is the business scaling and performing against the plans that were published.
That's a great introduction to the company, Edward, and we're going to follow the story with interest. Thank you for joining me today.
James, it's great to be here with you. Thanks so much.